Hey guys, a little video to say that I'm going to Amsterdam. I'm now in the Netherlands, cruising, and I'll be in Amsterdam tomorrow. And you're invited if you're close by Amsterdam or you feel like flying. Tomorrow night I'm organizing a meetup for those that are interested in a pleasant coffee shop in Amsterdam, and so we can talk and have fun. So contact me on Telegram at Mark de Mezel if you are interested to come. And maybe I can say a little bit more about my last video also about crypto, because I got many requests to make a video, and I was a little bit high also, and not so articulate in the video. So it's a great the Trollo chart is a great chart to get an objective perspective on where we are in the cycle and whether crypto is fairly valued, overvalued, or undervalued. And even though crypto went up from 250 billion to 350 billion, it's still undervalued today. Crypto, I redid the calculation, and the trend line now stands at 410 billion, and valuation at 360 billion, so about 10% lower. So that means it's still a good price if you don't have any crypto position and you need to take in your first positions. Yes, it's still a good time to do that. It's still even undervalued. Huh? So, I mean, you have FOMO in the market now, of course. If when price go up, like Ethereum had the bottom of 100, but it's now at $400, so things have been going up. There's even some hype in the crypto sector, the DeFi sector. Coins built on top of Ethereum mainly have been doing 5x, 10x, so there's actually real hype there. But this, of course, triggers also FOMO. Should you buy now, or will you be left behind? Will it go up parabolically from here? There's still hope in the market for crypto to go up parabolically from here in this year 2020 and make new all-time highs. And of course, you always have to protect yourself against that, because it can happen in crypto, and actually my probability for that is high, but it's not a majority. A majority probability I have at 55% that we revisit the 60% undervaluation. That's the highest probability, and that's a long way from here down. But that means there's still a smaller probability that actually that will never happen again and we go up. The crisis, of course, the corona crisis has accelerated adoption in crypto. So if a crisis like this has any influences on innovative sectors, it's that they get traction faster, and there are some signs that the same is happening in crypto. So that's why you should not wait for a correction and be 0% exposed. That's way too risky to be left behind. But should you go invest today if you're already decently invested, as I am? 45% of my portfolio is investing crypto. Should I go higher here? It's a difficult question that I ponder myself often, because I do sit on 30% cash, and then I have also 30% or 25% investment in oil tankers. That is certainly not as good of a risk reward as crypto is today. So I do ask this question myself often, and yeah, I think the right answer to this question is you have to invest according to the probabilities. You don't have to make a bet, you don't have to make a guess, you don't have to shall I pick red or blue or black, and then cross your fingers that you will win. No, in investing you can just follow the Kelly criteria, and that is that the better that the investment is, the more you invest. The better the risk reward ratio in the long and short term, the more you allocate to it. And so you have to be rational about that. But it's actually a great relief, because if you're not rational about it, you always have to second guess yourself, double guess. Every day is a new day of challenges and difficult questions to answer yourself and difficult decisions to make. Well, if you have a scientific approach to investing, that's not the case. You don't have to guess, you just have to like calculate and execute, and it's actually a big relief. It does require lots of discipline, because it's difficult to follow such a plan, to follow the Kelly criterion, which dictates to invest big when it just has dropped a lot, when there is lots of fear in the air, to invest when people are negative about the market. That's when you have to invest big. That requires discipline and courage, and it also dictates usually to actually not invest more if it goes up. No, because the risk reward goes down per definition if it goes up, unless fundamentals have greatly even improved more as the price, but that's rarely the case. So usually risk reward is less. Like today, for example, crypto at 360 billion has a lower risk reward ratio than at 250 billion 2 weeks ago. So should you allocate more today? No, you should actually allocate less today to crypto. Does that mean you need to sell off some crypto? Yes, that means allocating less, you sell off some. But I would also not recommend that, because that's not how you make 10 baggers or 100 baggers, by selling, chopping off a piece every time. No, you have to hold, you cannot sell a piece. But can you buy more now? No, also not. The only thing you can do is hold, if you are allocated enough. And also, how much do you need to allocate? You can calculate with the Kelly formula. As I did in the video, as I showed you, the calculation shows that based on current prices and based on the probabilities that basically 45% we go up, 55% we go down, so majority probability that we go down, and based on the targets set, doing this calculation, Kelly says you should allocate 30% to crypto today, not more. So that's the answer to the question, should you invest or not? Well, yeah, if you have less than 30%, you should invest. If you have more than 30%, you should not invest more into crypto. And should you sell crypto? Well, if you have less than 30%, no. If you have more than 30%, you can sell some, but I wouldn't recommend that either. But it is a rational thing to do, to sell some also. That is not breaking the rules of the Kelly criterion. So yeah, interesting. It's a balancing act. There is always the risk of missing investments and missing opportunities, and I have missed many, and I continue to miss many. But it's not really painful when you haven't even seen the opportunity, and when you did not even consider investing. Then it's not so painful to miss out. Like for example, I'm missing out on DeFi, but I never even considered investing in it. But many people have mentioned it from time to time, but I wasn't interested in it, because every time I do research in the DeFi sector, I find that these offerings offer not much value. It's basically locking your Ethereum and being able to borrow against it, seems it for the most part. But anyway, I didn't feel bad about that. Yeah, so that was it. Thanks for watching, and I hope to see some of you guys or someone in Amsterdam tomorrow. That would be awesome. Bye.